Oh, like companies that are already producing. Yeah, not the. There's not too many like silver exploration companies, and there's not that many primary silver producers, so it's tough. But I've got the major silver miners in my portfolio. I don't think you need to complicate it. Lower, especially in the short end, because they can control the short end rates, maybe up to a year. But the longer term rates is not so simple. When they started cutting rates, actually in September of 2024, the 10-year yield was at 3.6%. And as we speak here, it's around 420. So I would expect the bond vigilantes to come out. They've been in hibernation for decades, but I think they're coming back. Yeah, so lower short-term rates, higher long-term rates, so a steep yield curve, and more inflation because it's really simple. We've got a lot of debt, not just in the US, but in the whole world. And the only way to make that debt manageable is to make it worth less. So that's what they do best. Central banks and governments, they inflate. Inflation is not something that comes out of the blue. It's just them spending, the government spending too much money, and the Federal Reserve obliging with, well, you can call it increasing reserves, or you want to call it money printing. So yeah, that's why I think gold and silver are making all-time highs today, and not to talk about what's happening in the Middle East and Iran. That could be another trigger for the metals.
Yeah, of course, I do want to also get your take on what's driving gold and silver prices. Certainly, the action that we're seeing today would be playing into that. What else are you looking at when it comes to drivers for the metals right now?
De-dollarization, I think, is important with what, I mean, even Trump's, America's allies, even where you are, Canada, Greenland, Europe, no one even knows anymore if America is their friend, but let alone the other countries in the global south. And what happened to Maduro is a really stark warning to these countries. And I think, I'm not saying they're going to get rid of all their dollars, but they're going to hold, just enough, as little as they need. And the rest, they're going to be putting it in the safest and the asset with the best track record, in the last few thousand years. That's gold. And even silver now, we're seeing central banks getting involved. India is putting silver back into the credit market from April this year. They're allowing people to use it to collateralize their borrowing. So yeah, that's driving gold and silver too. I mean, there will be a correction along the way. I don't know, it could be next week, but I think we're going to continue to see a lot higher prices because, not just the fundamentals, but technically as well. I look at the technical analysis sometimes, and we've broken through some really key technical long-term levels. Like I think it was 2024, I was looking at 2,700, and we broke through there. And then we corrected below that level after the US election as a testing of the breakout. And then from last year onwards, we've just kept going higher. And if you look at this chart, it's to the early 70s and it's logarithmic. It still looks like there's a lot of room. And silver, you probably heard of this cup and handle formation. That's 45 years. And we finally broke out of that late last year. And a lot of people have been calling tops for silver, but it just keeps going. I wouldn't Yeah, I think we'll be a lot higher at the end of this year. Along the way, of course, it's difficult to tell exactly what it's going to do.
Inflation doesn't appear by accident. It emerges when governments spend beyond their means and central banks accommodate that spending. Across developed economies, debt levels are now so extreme that repayment in real terms is unrealistic. As currencies lose purchasing power, investors look for protection. Gold and silver historically perform that role. Recent record highs reflect more than speculation. They reflect erosion of trust. Add geopolitical instability from the Middle East to Eastern Europe, and demand for neutral non-sovereign assets accelerates. Precious metals don't rely on promises. In periods of monetary stress, that independence becomes their greatest advantage.
I think it's a little bit like if you look at Venezuela, for example, some like a decade ago, maybe less, and Zimbabwe and Brazil. A lot of times their stock market indices perform really well. And the reason it did is because they were pumping so much money and credit into the system, inflating the system. And I think that's what's happening in the West as well. I've seen a lot of headlines this year here in the UK because the FTSE broke 10,000 for the first time ever, and everyone's really excited. But if you price the FTSE in terms of gold, we're actually really dipping. And to me, that's the only way to price. Being a sound money guy, it's the only way to price assets in terms of gold. So I would say to investors, yeah, maybe buy the stock market, but be aware that it's kind of a false value. I think, in my opinion, if you can, yeah, if you can have some gold and silver on the side, it might help neutralize the loss of purchasing power in the currency as well. And it says, Charlotte, that gold and silver are outperforming the stock market, and I think and the bond market for that matter. And I think that's going to continue. People have been calling tops the last 6-9 months, and it just keeps going up. Maybe it could be some kind of crisis out of left field, a banking crisis, maybe triggered by this credit card announcement or anything else, or it could be like the let's say bombing of Iran by the United States. That could be it. We could see a sharp correction in the stock market lower, but then because oil prices would also like go through the roof, and that hurts the economy. But then I would think that the central banks and the governments would jump right in to to save the day again. So they're not going to let things get out of hand. So yeah, but then again, gold and silver will do even better. So yeah, everything goes back to gold and silver, and I know it's like a bit of a repetition, but we're not in normal like Goldilocks times, like the '90s or the first decade of the 21st century. This is like, I think, like the end of this fiat currency regime. And when things are near the end, the people in charge and the system itself gets desperate, and they try as hard as possible to keep it going. And I think that's what gold and silver are telling us. I think the system will be reset when we see things like the Dow gold ratio or the S&P to gold ratio go down to levels that we last saw maybe in 1980 or even 1933. So a lot of room for, I think, for gold and silver and even hard assets in general, commodities, to outperform paper assets.
A quiet shift is underway in global finance. Nations are not abandoning the dollar outright, but they are reducing reliance on it. Sanctions, frozen reserves, and political uncertainty have changed reserve strategy worldwide. Central banks are diversifying into assets with long histories and no counterparty risk. Gold leads that transition, but silver is increasingly included. India's recent decision to allow silver as loan collateral reflects this shift. These moves signal recognition that physical metals still function as financial anchors when trust in fiat systems weakens.
Yeah, I guess copper, that's making all-time highs. Platinum, palladium, all the base metals, I think, and also not just the fundamentals are look good for these metals, but also the geopolitical situation in the world, the fact that the world is breaking up in terms of we don't have the U.S. being the hegemon anymore. We have like a multipolar world, and the U.S. is trying to like get back into producing rare earth metals and commodities because the West has just neglected that in the last 30 years because we have this environmental philosophy of not digging, nor exploiting the natural resources of our countries, and they let the Chinese do that, and they control everything now. So that's a big problem. So I just saw that the U.S. The Pentagon invested $150 million in a mining company that mines gallium, which is something I'm not even sure what it's used for, but it's one of these rare earths. So yeah, I think rare earths, base metals, precious metals, even maybe oil. I think that's been kind of on the back foot and kind of a hated commodity. So I think it could surprise on the upside, and it could be because of what's happening vis-a-vis Iran in the Middle East. Well, it's even more clear that it's becoming more dominant. Yeah, it's. Well, I just saw earlier today that the price of silver on the Shanghai Gold Exchange and the futures exchange was trading around $93, $94. And I think the Chinese exchanges, they're less leveraged than COMEX or the LBMA. They're real physical markets. Not saying that maybe there might not be speculation there, but it's less speculative. And I think that's one of the reasons why gold and silver have been going up so much, is because the paper game is now unwinding because, yeah, people want the physical. And we've had also in silver the supply deficit, production deficit for the last 5-6 years. And we have countries like I said earlier, India, they need a lot of silver, not just for to back loans, collateral, but they're also into solar power a lot, and they have a growing economy and a huge population, so they need a lot of this stuff. And also, unfortunately, the world seems to be becoming more and more dangerous and susceptible to a major war. And raw materials always become really important during times of war. So I think that's one of the reasons why, that's happening as well.
Beyond fundamentals, market structure matters. Gold has cleared long-term resistance levels, confirming a multi-year breakout. Silver has done something even more significant, escaping a decades-long consolidation pattern. These technical shifts don't guarantee a straight line higher, but they signal regime change. Corrections will occur, yet the trend reflects deeper forces. Stock markets may post nominal highs, but when priced in gold, many indices are quietly declining. That divergence reveals the illusion of wealth created by monetary expansion rather than real productivity.
Yeah, I think they are. I mean, they definitely are, and some people didn't think they would be. But I think it's one of the reasons why silver's gone up already this year. I think it's settled around 76. I've got the numbers here. Hold on, I wrote them all down. Yeah, it's actually silver settled at 71.60 last year. So we're up. I think where are we now? 85. So we're already up $14. So I think it's having an impact because China realizes that America is going to do the same thing. They're going to close off and control exports because, yeah, they're the two biggest rivals. So it's normal that China is doing that. And it's not the biggest silver producer, but it does refine and produce a lot of silver related stuff. And I definitely think they wouldn't approve silver being shipped to the COMEX or the LBMA. So I don't think it's a blanket, let's say, blocking of exports, but they're going to be a lot more careful of who, what kind of silver and to whom the silver is shipped abroad. I mean, I'm not an expert like in all those details, but from what I hear from people who have looked closer at this than me, is that there's a lot of goods that need silver, that the silver is so minuscule in that product that even if the price of silver doubles, it doesn't make too much of a difference to the price of that product. But of course, there will be things that, like solar panels, that maybe they'll try to substitute. But the other thing is that the more valuable silver becomes, it could be like a substitute in terms of jewelry for gold. And it could be even become like a status symbol, because with silver at $20, it's not, but if it's like $500, if you're wearing silver, you've got money, right? So yeah, it's not just the industrial. I think the jewelry part could be interesting. I mean, one thing you won't hear in the mainstream is the situation vis-a-vis COMEX and the LBMA, and the fact that the physical silver in those two exchanges are, the supply, and the availability of it is going down quite a bit. And you don't see the mainstream cover that much. And I think it's one of the reasons why people have been shocked with the fact that silver just keeps going up, because they don't understand that, because it's such a leverage market in that there's a lot of shorting, paper shorting, and if people, other counterparties are demanding physical, these shorts, they're gonna have to buy the contracts to close it out, and that drives the price higher. I think, we hear very little about that on the mainstream financial press. That's something that I think people need to be aware of.
The center of gravity in metals trading is shifting. Asian exchanges, particularly in China, reflect tighter physical supply and less leverage than Western paper markets. Rising prices in Shanghai relative to New York suggest genuine demand for metal, not derivatives. Years of silver supply deficits have compounded this pressure. Industrial use continues to grow while mining output struggles to keep pace. When physical buyers dominate, paper structures unwind. That transition often catches investors off guard because it unfolds outside mainstream financial headlines.
I think the institutions that want to take delivery are sovereign wealth funds, very wealthy individuals. And I think the penny is dropped and they don't trust the paper contracts, and also central banks in the Middle East. I think the BRICS, aside from gold being a really important part of their new monetary architecture, I think silver is going to be part as well. And I think places like Dubai and places in the Middle East, Saudi Arabia, they want to be a hub for silver. So they're not going to just buy futures on COMEX or unallocated silver on LBMA. They don't care. They just want the physical. Yeah, the paper is nothing for them. I think so. Yeah, I think so. And yeah, maybe there's still a lot of disbelief that the price might not stay up here for too long, so people are a little more cautious. But I think the silver miners, they've got the best potential, really, even more than the gold miners, and that's where I've put my money to work in. I mean, I have some gold miners, but I've shifted a lot to the silver miners. You just
I
have to be patient. Oh, just like companies that are already producing. Yeah, not the. There's not too many like silver exploration companies, and there's not that many. Primary silver producers, so it's tough. But I've got the major silver miners in my portfolio. I don't think you need to complicate it. Yeah, I mean, I have a couple of dates. I look at cycles. One of them is around 2027, 28, and that's to do with the Dow Gold ratio. And I've looked back in history, like from 1933 to 1980, we went from 2 to 1 in the Dow, and then back to 1 to 1. And that cycle took 47 years. And so if you add 47 to 1980, you get 2027. But I've heard from people who are a lot more thorough and have done like really long-term analysis of the cycles going back to like the 1600s. And I think it's Bert Doman. He's a German American investors in the precious metals, and he's got a date of 2032. So I think we still got quite a bit of time in the precious metals bull market. I don't think we are like in 1979, which was like the last year of the 1970s bull market that culminated in January 1980. I think we got more time on our hands.
This metals bull market is not a short-term event. Historical cycles tied to currency regimes, debt resets, and purchasing power suggest years, not months, remain. Previous transitions unfolded slowly, then accelerated near the end. We may be closer to the middle than the peak. As commodities, rare earths, and strategic materials gain importance in a fragmented, multipolar world, tangible assets outperform paper claims. Gold and silver are not signals of prosperity. They are signals of stress. And right now, those signals are growing louder.